You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. Now, let's open the playbook and get started.
All right, welcome back to our continuing series of content from the Options Industry Conference, mixing things up now, doing an episode of the old OPR down here, aka Options Playbook Radio, live in the same room with my old friend, the options guy himself, now the options man about town, Mr. Brian Overby. Good to see you in the same room, sir. How are things in Overby and indeed Options Playbook land, sir?
Well, things are rocking and rolling, and yeah, you're right. At this point in time, I actually have launched our website, a new version of it.
Oh, so it's official. It's
official, right? And my company is called Options Playbook Incorporated, so we are rocking and rolling on the website. Please go check it out. It's got a whole new look and feel, a lot of new features.
I'm going to do that right now as we're talking.
Yeah, we're going to be adding some new video to the site, and also looking to add some new graphics. So all of the profit and loss graphs are going to get a facelift. They're going to be showing you the profit and loss as the expiration approaches. So just an easy site to go to see exactly what you're talking about when you say skip strike butterfly. One of my favorites. You know that, Mark.
I like it. I'm liking the website, too. I'm looking at it right now, Brian. I like the new layout. It's very clean. I like you have a big link to buy the book right there, so you're not messing around.
Well, now,
I like
so
that.
Nowadays, here's the difference: is I actually make some money off of the book. Back in the day, I never did. So sales are still robust. It's been out there for about 18 years. Let's be more accurate. And I am working on a third version. I'm going to add some management of strategies because out of the 5,000 or 6,000 reviews that I received on Amazon, the only thing that I've ever seen that has kind of been a downer is the fact that I don't talk enough about management. And that's what Options Playbook Radio is all about, talking about management, setting up a trade and then looking at that trade and see how we might adjust the trade. So by doing Options Playbook Radio, came up with a lot of different ideas on how I might approach that, and I'm going to add that to the next version of the book. To be determined when it's going to be coming out, but that's the plan.
I like it. I like the website, too. If I'm distracted, it's because I'm looking at your glorious new website here, Brian.
Well,
so, listeners, if you want to keep Brian in new boat wax for his boat, then head on over to the website and make sure you click on the Buy the Book link, because that actually goes to him now as opposed to another firm out there. Let's get into it. You mentioned your favorite thing, the skip strike. I will say I've been talking about a lot of things down here at the conference this week. Not really skip strike flies. This is a fun change of pace for me, Brian. But I've known for a while you have a couple of strategies that are your go-tos. I would say the skip strike, probably number one. Well, we were joking before, you love a good long straddle, so that's up there now, probably somewhere in the mix. And then, of course, your old standby, your old favorites, the fig leaf out there. But I would say, would you say skip strike is the number one?
I'm going to go with fig leaf.
Really?
But I would say
more than okay.
Yeah, but on OPR, we talk a lot about fig leaves because, first of all, it's all about the pricing. It's such an interesting trade when you get into the pricing. You learn so much from doing a skip strike butterfly.
Skip strike. Okay, you said fig leaves. Okay, yeah.
I'm saying that's why I talk about them a lot on OPR because we're learning. We're looking at trades around earnings. You put them on, and we got expiration near, and you learn a lot about the trade. But if I just talked about fig leaf every single time, that's a boring trade, and that's really what it's intended to be, is boring. But I do enjoy. I have an entire portfolio that I talk about on my show sometimes about fig leaves deep in the money, and I'm watching a whole portfolio that's going to last an entire year and managing that portfolio, and that becomes part of the show. And eventually I might just make a whole video series out of it just based off of fig leaf trading.
What's the hot name? What's the one you're slinging the fig leaves in right now?
Well, the only NVIDIA. We actually bought a deep in the money call option, so I almost feel guilty saying it because it's gone, it's taken off. But in November, we bought deep in the money call options on NVIDIA. And, a couple of just simple ones, a little higher price stocks. Caterpillar, I bought some Caterpillar, actually got forced out of the position because I fell asleep on it. And I had the call option got too in the money, and I just closed it out and then waited a month and reopened it again. So these are some of the things that we talked about using deep in the money options as an alternative to the stock. And, well, there you have it. So on OPR, I would agree with you. My favorite trade to talk about is a skip strike butterfly.
It does seem like they are heavily represented on the show, yes.
Right. And there's some rationale behind it. And because I've talked about them so much, I have so many different thoughts on the way that I approach them. But I appreciate the fig leaf as one of my favorite strategies inside the playbook. And I love the fact that the name actually has taken off, that we put in the playbook. And we've always said the rationale behind the fig leaf is that you're kind of covered. The brokerage firm thinks you're covered, but bottom line is you're buying a surrogate for the stock, and it's still an option. And if you get assigned on the short option contract, you got an issue. You got something you got to deal with. And that's where the concept of being kind of covered has always kind of played into the name of the fig leaf.
But as you mentioned, your favorite, well, I guess second favorite is the skip strike. Where does the long straddle fit in? I'm confused. You've been loving yourselves long straddles. In fact, what did we just had? You had our listeners buying IWM straddles. They had to go out and buy Boeing straddles.
Well, that wasn't a recommendation. But the bottom line is that I've had some luck with long straddles on this show. That straightforward, that simple. And there's been, and I know that not a lot of the instructors in general are long straddlers of in particular stocks. So there's every once in a while I see an opportunity, either based off of the chart or, for example, like Boeing being in the news again. You never know when they're going to get blindsided. So if you're looking at a long straddle, I would rather do it on a stock that doesn't have pending news, like an earnings report, and hope that something happens. And Boeing has been a great one for that. It should be trading like a utility, but it's been as low as 100 and as high as 340 over the last, I think, 2.5, 3 years. I'd have to look at the chart to be exact. But when it started its downfall, it was as high as was it 340 or 440? Somewhere in that range.
Somewhere in that range, yes. I forget the highs.
Way up there, and now it's trading. It still has the same issues.
I lost track of Boeing ever since they moved away from across the street from our studio now. So I have less of a vested interest in tracking them because they don't have the delicious cafeteria lunch they used to offer across the street. So why would I watch Boeing, Brian?
Yeah, shame on them for taking that away. You hold a grudge long.
I do. I do. I'm a very bitter man here. But yeah, you're Mr. Skip Strike. Outside of my joking about your love for all things straddle, you are Mr. Skip Strike. And we were just kind of talking before the show, before we sat down, about why you like those. So this is what Brian and I do. We get together in all various areas of the country, and we discuss, why does he like skip strike butterflies? This is what we do. So we were doing that again today here, listeners. Brian, illuminate it for our audience. Why are you so in love? And it sounds like you might even have a couple of tweaks up your sleeve, sir.
Yes, this is OPR, right? Options Playbook Radio. So we usually, around this time of the year, we look at earnings on some stocks and just kind of have some fun looking at potential trades that we may do. And Apple's announcing on a Thursday, and that also means that these options, so you talk about 0 DTE, they're announcing on Thursday, and then after the close, and then you have all day Friday for these option contracts to wither away and expire and implied volatility to come in. And so with Apple, I don't expect a lot of volatility, and I think I would lean a little bit bearish just because they've actually had a fairly strong move. But now the one issue with Apple is it trades a little bit like an index. Even though they got earnings, we're still looking at implied volatilities around 55% or so, and it normally trades around 20% vol. So there's just not a ton of vol, so it's not as enticing, but I'm going to talk about it anyways. So one of the biggest things about the skip strike butterfly in Apple is when I think about the skip strike, I think about it much differently than most people. Most people would think of it as I am modifying a butterfly. As a matter of fact, that is a name, or sometimes a broken wing butterfly. But what really entices me about a skip strike is that I'm modifying a short call spread or a short put spread. In Apple, we're going to do a skip strike butterfly to the call side. So we're going to talk about modifying a short call spread. So ideally, when you do a butterfly, and in the playbook, I like this so much better, Mark, I named it skip strike butterfly. I knew that at the time, modified butterfly was a more popular name, but you're literally skipping a strike when you do the skip strike butterfly. A normal butterfly, you would have equally wide short call spread and long call spread. But what you do is you skip that one strike on the short call side and you go one more strike out, and that actually embeds a credit spread into your skip strike butterfly. So, Mark, the moral to my story is, if you are a short call spread trader going to the next level and learning about skip strikes as an alternative, actually embeds your adjustment into the trade and makes you less fidgety, for lack of a better term, if the market starts going towards your short strike as expiration approaches, because that could actually be a good thing.
Yeah, usually going to the short strike can be a good thing unless you're heavily short naked, in which case it could be a scary prospect. But you're right. There is something to embedding that element of adjustment ahead of time. It kind of does some of the lifting, it does some of the work for you. Because you're right. People are not going to do it. If they're just doing a short call spread, they're not going to adjust. They're just going to sit there freaking out. And as it gets closer to the strike, they're going to be like, what am I going to do? If you have the other legs to it, I'd much rather see people doing, flies anyway, just even if they are, broken wing or skip strike, whatever you want to call them. Right. By the way, why are you not you don't like broken wing, huh? That's not, never been your...
No, it never has. And when I wrote the playbook, broken wing was really the term. And that was by far, because then you're making the emphasis about the butterfly. And my emphasis, and the reason why I like them, is an alternative to a credit spread. That simple. To a short spread, short call, or short put, whatever side of the market you're on.
Brian, never been a man to grok to old options terminology. He makes his own, damn it.
literally makes his own. Because we did that with the fig leaf. I think that might be on my tombstone. Brian Overby, the man that changed the name of leverage covered call to fig leaf.
It is better than or synthetic covered call. You're right. It is a little better than that. Well, there you go, listeners. A little bit of an overview of all things skip, strike, fly. But you're down here at OIC, Brian. How has your trip been to OIC so far? Any hot conversation, any hot topics coming across your radar here at OIC this year?
Well, the beauty of the mountains. Oh, my gosh.
I'll take your word for it. I've been in this room for about 3 days, but I hear it's nice. Everyone who comes in here tells me it's lovely.
Yeah, we're up in lovely Asheville, and the hotel is gorgeous. It is the Omni in Asheville. Gorgeous view, overlooks the golf course. So the Options Industry Council has always been very good at picking venues, without a doubt. So really been enjoying that. And then also, just talking 0 DTEs. They keep coming up all over the place. We talked a little bit about those. And I think the main topic is there going to be, single listed DTEs? And I've always been kind of wishy-washy on that one a little bit, Mark. And I think I'm a little different than a few of your other guests. And one of my biggest issues is that if you go down that road, back in the day when they first invented options, there was a reason why you had 5-point wide strikes, and there was a reason why you had only a limited amount of expiration dates, and they expired on the third Friday. And a lot of that had to do just because he wanted to make the markets as liquid as possible by offering the right amount of option contracts to keep the liquidity okay, if you will, right? Back in the day, it definitely wasn't good, so we're going to just say okay. And if we go into the single listed and you have some good stocks that are out there, like I'm just even thinking, let's talk ones like that would be on a cusp maybe, like Walmart or Target, something that's in the retail space that trades decent options. But I'd hate the fact if we start going down the road of adding zero DTE to a lot of these medium volume stocks that it just starts driving up some of the liquidity of the market that we fought so hard to get over the years. And that's I'm okay with it. And I do like it in the SPY. I do love that you can plan your strategy. And this is part of the reason why with Options Playbook Radio, we look at earnings and we talk about skip strikes, and you just have things that move. You can talk about it on Monday and you can come back the following Monday and something happened, right? Because you can pick your expiration and you can make that happen. So I do find it very intriguing on a few, but I don't know if I really like it to start filtering into all of these single listed option contracts.
Well, you'll be pleased to know, Brian, that doesn't seem like it's happening anytime soon. It seems like the regulators are kind of pumping the brakes a little bit on that, and it seems like they still need to get all their I's dotted and T's crossed behind the scenes in terms of what happens to contra exercise orders. How do you educate retail about that? There was some talk for a while there, Brian, about creating a new class of cash settled equity options to try to work around this, which to me was insanity because you're a whole new education lift with those just to create another 0-day expiration during the week. So thankfully, it seems like they're maybe moving away from that a little bit, but not. So I guess if you're super excited about 0-day liquidity, maybe the news isn't the best list. It doesn't seem like it's coming anytime soon. And it certainly sounds like, Brian, the options on the Bitcoin ETFs that everyone is very excited about also probably not coming anytime soon as well. So, yeah, it's, I guess for our listeners, maybe not the news they want to hear, but it's in the offing. It definitely seems like the 0-day single name stuff will happen before we see the Bitcoin options. That definitely seems to be the way that's going to play out. Some folks think it's still a question of if rather than when on the Bitcoin options side. The regulators are not too keen on the prospect, Brian. So, yeah, it's interesting times down here. And, of course, Brian, your favorite topic in the world, flex options. Those are apparently very hot again.
That's my favorite topic?
That's your new favorite.
I didn't know that.
It's with straddles, awesome. It's with skip strikes, and also flex options. These, of course, listeners, are non-standard options, so a big customer can come in and they don't want to expire on, let's say, the usual monthly expiration or weekly. They want their own strike and month and expiration, and they could create those. Obviously, there's a cost associated with that, but if you want that, those have always been out there. But lately, the volume is picking up quite a bit. The open interest is picking up quite a bit. A lot of these defined outcome ETFs that are rolling out, Brian, that incorporate some sort of optionality are using flex to hedge that. So that's been driving a lot of flow. And also, interestingly enough, even names like Nikola. If you look at their outstanding OI, there's more open in the flex now than there is in the listed options on names like Nikola. So some interesting developments out here. Everything old is new again, Brian. Flex is hot again. We're talking about after hours options. Just another thing. Doesn't seem like that's happening anytime soon either. The after hours thing was all the rage. So that's a debate I thought we had tabled a while ago, but that's back in play now. So it's been a fun week for me, Brian. Everything old is new again on the options front, sir, including doing an episode of OPR here with Brian down here at OIC. Any last thoughts, any last words of encouragement or just well wishes for the legion of OPR fans out there who are craving more OPR in their lives, Brian?
All right, here, I'll give them the last thought. here it is. I'm going to set up the skip strike in Apple. I don't really like it because we're not doing it for a net credit, but I'll give you, because OPR, we're all about strategies. They announce on Thursday, we're going to use the Friday options, just good, clean fun, put this trade together. We're going to look at the May 3rd expiration. We're going to buy the 177.50 strike, sell 2 of the 180 strikes, skip the 182.50, and buy the 185. It's only 2.5 points wide. Like I said, not a lot of vol, but I can get that done for even right now with where the markets are at. And the 180 strike is right about 1 standard deviation away. So you need a little bit more than the expected move to get there, and you only got 2.5 points of risk. So it's literally just kind of a fun trade, and I'm going to put it on my account just because I'm here at the OIC, and why not?
Going to put some of those NVIDIA fig leaf profits to work.
See,
on the Apple skip
never
strike.
Used to be able to say that, right? I couldn't get as granular. Now I can get a little bit more granular with my comments.
I like it. If you're going to pick a name to fig leaf, you could do worse than NVIDIA these days, unless you're selling straight at the money. But even then, you're probably doing all right. That vol is so jacked. Yeah. You're probably doing all right on that one. Well, Brian, it's good to see you in person. I know our listeners of OPR will be happy to have another episode hitting the feed. Stay tuned, stay subscribed, listeners. We'll have more info for you on what's going on with OPR coming down the road. While they're waiting for the next episode to drop, sir, if they want more Overby in their lives, where should they go? What should they do?
All right, so follow me on X. If I'm doing anything, I'm going to post it. It's very simple. It's at my name, at Brian Overby. And with that being said, I guess we'll do the old sign-off. May all the options that you buy finish in the money, and all the ones that you sell finish out. Thanks for stopping by.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.